I want to show you guys a quick message with inside the private CyberX Discord from a member. He went on to say that he had a limit order for XRP at 65 cents given the fact that the market just recently dipped. It dipped to 65.2 before going back to 67 cents. I think it's crazy that I'm catching these dips now. Before jumping in the Discord, I just used to make guesses at where I think it would dip, not taking into account all that's happening in the market during that day or week. Now, there's logic behind my decisions. This is the importance of tapping into the information that we're putting out to you all. If we do see risk assets pull back, we will be monitoring our DCA levels to take advantage of any discounted buying opportunities. Alrighty, what is going on, everybody? Welcome back to another CyberX video banger. In today's video breakdown, I'm going to be showing you all why, as a dollar cost averager in crypto, it's extremely important for you to understand fundamentals, understand when it's a good time to plug capital into this market, when it's a good time to be patient and wait, how we plug capital in at CyberX, and how we've been able to build a profitable portfolio over the course of the last 2 years, given the bear market cycle and the current cycle that we are currently operating in now. So if you all enjoy these video breakdowns, again, straight to the point, showing you guys devils in the details with timestamps, going over price action, showing you all how these dynamics change market sentiment and create fluctuations in the digital asset space, do us a favor. Smash that thumbs up button and subscribe. Seriously, take some notes. Please pay attention to what it is that we're attempting to show you guys. One of the realest communities in the game, always giving you guys valued content. So we're just going to revert back to March 11th, 2024, roughly around 8:12 a.m. So early in the morning, I mentioned to you all this whole entire overview and what sentiment we were gauging in the market. Now, the market on March 11th at 8:12 a.m. was a risk on market sentiment. And we were pretty much just discussing in this data overview what needed to take place in order to see a continued risk on market mood and what would potentially happen if we saw dollar strength back on the table due to higher inflationary readings and stronger dollar. With that being said, at the bottom of this analysis, we mentioned to you guys on the X space that if we do see risk assets pull back, we will be monitoring our DCA levels to take advantage of any discounted buying opportunities in crypto. Now, I'm going to show you guys as time progressed on how we're able to gauge tops of markets and really truly understand when's a good time to dollar cost average into crypto, when's a good time not to. So just showing you guys a couple of examples from some assets that I hold in my personal portfolio, which I'm sure that many of you all can relate to, especially if you're utility bag holders. So here you can see where price is at as of time of recording this video, dollar cost averaging in at lows of price action. You can see the red circle on this specific digital asset. This is Casper, where that message was sent out to you guys at roughly around 8 a.m. on the 11th of March, right? You can see down here at the bottom of my charts, this is where price action was when I told you guys we wanted to wait for discounted buying opportunities. Let's go look at ICP as another example. You can see up here at the top of my charts, the 11th of March, roughly when I put that message out to you guys, you can see where ICP was at, hovering at a high. Let's go look at XRP as another beautiful example. You can see we had this massive pump on the 11th of March where XRP traded all the way up almost into 75 cents. You can see this red circle is roughly where we put this analysis out to you guys, letting you all know that we wanted to see a discount in risk assets before we engaged. So moving on, I want to show you guys the importance of understanding these fundamentals. So here you can see March 11th, we mentioned caution is warranted in case there's a pullback in risk assets, especially if the CPI data surpasses market forecasts, leading to a deferral of rate cut expectations. In such a risk-off scenario, the dollar could gain strength intraday, potentially flipping to a bullish territory if it rises above the range of 102.9 to 103.200. Therefore, it is essential to remain vigilant and adaptable to any shifts in market sentiment and data outcomes. We again posted this to you guys when the crypto market was at a high on March 11th, right? You guys can see the date on the timestamp. This is on the X space. So moving forward, this is the most recent analysis, and this is going to play an important, crucial role today. You can see this was put out on March 13th, 2024, and we're going to go over fundamentals. We're going to correlate Bitcoin price action with the dollar price action, and I'm going to specifically show you guys where we were putting this information out to you guys and why it's so important. Now, I want you all to keep in mind that I have the Bitcoin chart inverted, so as above, so below. Right now, the digital asset space as a whole has slightly pulled back. Bitcoin in particular, retracing from roughly around 73,000, roughly around maybe 6 or 800, okay, give or take, and has dropped all the way down into roughly around 71,000, right? So with that being said, keep in mind where we're putting this information out. I'm going to re-invert my chart so you guys can see how heavily correlated these fundamentals are and why it's so crucial to be paying attention to this information. So looking on the X space, particularly at this post, I want you guys to pay attention where we put this information out. And then I'm going to show you guys how the retail herd is catching up afterwards. Okay. So we said, obviously, of course, giving you guys two scenarios. The best case scenario, which would be a continued risk on market mood, which is not what we saw today. We saw a slight dampening in risk sentiment today, and this was due to upbeat data. So you can see scenario number two that we covered was a dampened risk sentiment, where we said, conversely, a scenario where the dollar strengthens beyond the 103.00, accompanied by a rise in PPI readings, robust retail sales figures, and a decline in unemployment claims is likely to dampen risk sentiment. Here's how. Dollar strength above the 103. A stronger dollar typically weighs on risk assets as it makes U.S. exports expensive, potentially diminishing investor appetite for riskier assets. I'll pause right there. Again, remember, I put this post out to you guys on the 13th of March, a day in advance for everybody to have, right? Again, obviously, of course, we give this information to our private community well in advance, but now let me show you how crucial it is. Here is a retail-driven article, i.e. the retail herd catching up, that came out the day after 03/14. You guys can see the date right there. And what do we see? You can see right here. Hot US PPI data dampens appeal for risk-sensitive assets. Investors' risk appetite eases on expectations that stubborn US PPI will reinforce fears that the Federal Reserve could delay plans to reduce interest rates. You guys see that right there. So the market sentiment changed hands. Where on the 11th, we mentioned to you guys that there was a prevailing risk on sentiment, i.e., again, looking at the charts, we saw XRP shoot up in value, other digital assets like ICP shoot up in value, Casper shoot up in value. I'm just showing you guys examples. Bitcoin shot up to new all-time highs, right? However, that sentiment changed hands intraday, where we saw the market mood change and the market pull back, right? You guys starting to see how important this stuff is. Uptick in PPI and upbeat retail sales. Higher PPI readings and robust retail sales indicate inflationary pressures and strong consumer spending, potentially prompting concerns about the Fed tightening monetary policy rather than easing, which could dampen market optimism. So we mentioned that to you guys ahead of the curve, a day in advance before the news came out. Lower unemployment claims, we also mentioned. A decrease in unemployment claims signals a healthy labor market, reducing the need for aggressive monetary stimulus measures like interest rate cuts, which could further weaken the narrative, driving greed in risk assets. And sure enough, again, remember, paying attention to dates, we put this out on the 13th, and what do we see? Retail fundamentals coming out after 03/14/2024. U.S. weekly initial jobless claims declines to 209 versus the expectation, which was 218,000. U.S. jobless claims in the U.S. decreased by 1,000 in the week ending in March on the 9th. The U.S. dollar index clings to small daily gains near the 103.00. And what did we say in the analysis would potentially drive strength above the 103.00? Lower unemployment claims. I even tried to give you guys little emojis to make it very simple and easy to understand, right? So you guys see the importance of understanding this information. Now let me go over to the charts and again show you all why this is so crucial to understand. So again, we have Bitcoin on the 5-minute chart on the left-hand side. We have the US dollar on the 5-minute chart on the right-hand side. Bitcoin is inverted. So again, as above, so below, I have my charts upside down. This is the actual Bitcoin price action where you can see from New York session open today, we saw a decline in the price of Bitcoin from roughly around 73,100 down to 71,500, right? Now I'm going to re-invert my charts to show you guys how heavily correlated Bitcoin is with the US dollar still to this day. A lot of people on X and a lot of people on YouTube will tell you that Bitcoin is decoupling. It is not decoupling, okay? It is not decoupling from the United States dollar. The strength in the dollar, the weakness in the dollar still plays a massive role in risk on, risk off market sentiment. And I'm going to show you that today. Again, make sure you guys are paying attention. So these orange boxes indicate when the news fundamentals came out this morning at 5:30 a.m. Pacific Standard Time. And you can see all of that sensitive data, i.e. driving strength to the United States dollar, at the same exact time, inversely correlated, drove weakness to Bitcoin, right? You guys can see the US dollar, looking down at the bottom of my chart, at exactly 5:30 a.m. when the US data came out, had a slight uptick or increase in the US dollar with a slight pullback, where the market makers thought that this was a discounted enough price, roughly around the 102.800, interestingly enough, historical psychological level, to drive demand back for the US dollar and push it up to where it's currently operating at now, roughly around the 103.1600, roughly around the 103.100, right? Whereas Bitcoin, inversely, remember, this is the opposite, okay? Bitcoin saw a sell-off starting exactly roughly at around 5:30 a.m., slight retracement so that market makers could get in at a premium and sell more of their Bitcoin. And you can see that Bitcoin dropped from roughly around 73,000 down to 71,500 at the same exact time that the DXY had an impulsive move to the upside. This is the importance of understanding these news factors, where we told you guys in advance this would happen on the 13th of March, letting you guys know the potential scenarios if we saw a dampening risk mood and dollar above the 103.00. Are you guys starting to see the importance of understanding this information? So again, as a dollar cost averager, right, where we were on the 11th, letting you all know that the prevailing risk on sentiment could potentially shift hands and that we would take advantage of discounted opportunities on March 11th when prices were at a high. You can see now, taking advantage of discounted opportunities, what would, again, now people will say, okay, this isn't important, right? Who cares as a dollar cost averager? It's not important, right? Why on earth would you want to be buying up here to see a decline in your portfolio when we could have waited to buy here, where now you would be seeing an increase in your portfolio? You understand the power now of this information, okay? And I'm using just Casper as an example, ICP as an example, XRP as an example. You could use all these digital assets across the board. You can see that almost everything in the form of digital assets right now, give or take some different assets, like FET is a little bit up right now, SHX is a little bit up right now, but the vast majority of assets across the board are in a slight decline. That is due to the strength in the United States dollar, the slight uptick in the dollar strength that we had today. And when you understand these fundamentals and you understand how important this is to your strategy, it becomes extremely relevant. So now, again, let me show you guys. This is where we put that post out to you guys. Let's invert the charts on Bitcoin and let's expand this, okay? So here you can see, this is now the correct Bitcoin price action on the 5-minute chart. And again, showing you guys that we put this information out to you all at tops. Here we said dollar strength above 103, uptick in PPI readings, and lower unemployment claims would cause a slight risk off sentiment. We said right here, potentially diminishing investor appetite for risk assets and creating discounted opportunities. So again, why on earth, if you're a Bitcoin investor, would you want a dollar cost average in a Bitcoin up here when you know fundamental factors could potentially shift market sentiment instead of dollar cost averaging in down here once prices are discounted? I've just now showed you how here at CyberX we properly gauge these fundamentals along with putting our analysis on the line, people. Okay, we're really giving you all these insights, putting our insights on the line for you all to tap into so you can really see how we are building profitable portfolios here at CyberX. Not only with dollar cost average positions, but also as day traders taking active scalp positions in this market for profit. We give you a full fundamental video breakdown over 40 minutes long on the YouTube space covering all this information just yesterday. So if you missed it, make sure that you go back and check it out. We covered all this information and potential scenarios that could play out. our bullish areas of interest where we'd be looking for discounted buying opportunities, and how we were set to gauge today's market fundamentals and the overall effect that they could have negatively and positively on risk assets. With that being said, as always, be cognizant, be aware out there, always attempting to bring you guys the realest information and why, even if you're not a day trader, it's so crucially important for you to understand not to chase market momentum, to be patient, to really understand these market dynamics and what weighs on risk assets and what improves or increases risk asset demand. As always, please be cognizant. Please be aware out there. I hope that giving you guys these insights is really truly waking some of you up. I know that some individuals out there will be like, nah, this isn't important for me to learn. I don't need to take any of this stuff serious. But for those individuals that are taking this serious and you are learning, we seriously do appreciate you for showing up. At the end of the day, consistency is key, and you gathering this information over a prolonged period of time is what will drive success in your trading and investing career. As always, if you guys want to join our private community where we go over this information and we give these market fundamentals and technical analysis breakdowns well in advance, visit cyberxtrading.com. We only have about 80 slots left. They're running out. So once those slots are filled, we're going to be cutting off general access via our monthly subscription program for some time via the general public.